Athens erupts in violence as Parliament passes deep austerity measures. The fate of Greece is now with Brussels as the country tries to secure its second big bailout. Futures are following European markets higher. I'm Alix and the morning call starts right now.
Good morning, I'm Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Alix with The Street, and together we bring you Morning Call Express. Happy Monday, everybody. Futures are also looking happy. So we have futures popping on Greece finally implementing now 3.3 billion euros of austerity measures. Is this up open problematic for traders?
It definitely can be, because finally on Friday, the bulls had their first real test. You know, futures were down probably 12 handles, the biggest down open we've had. So traders had to say to themselves, including me, what do? Do we cover our hedges because we're finally down? Do we add to longs, or do we maybe take some risk off and keep the hedges on because it's only one day, we're very extended, what's next? So coming in today, you know, traders are going to have to rebalance themselves.
So what do you think that means? Do you think they're going to kind of rush in to not miss this pop? Will they have to be forced to short cover here, or will they take this opportunity to continue shorting, hoping that there'll be more of a correction later in the week because it's a heavy week of a lot of data?
Well, I think what the shorts will do overall is on the open, maybe they'll lay a little bit more out. If they're short the spiders or the diamonds or the Qs, they'll add a little bit in the first 30 to 60 minutes. But if we get a 60-minute close above the recent resistance, they're going to have to cover, because then the next target is 1370. So if we look at the chart of the S&P, you will see, you know, strong markets follow their 10-day and 20-day moving average. I mean, actually strong stocks, let alone the indices. And ever since we broke above this descending channel here, you know, back on December 20th, the spiders themselves and the SPX have been riding the 10 and 20 day. And on Friday, all we did is break this little 4-day range and test a 10-day, and we closed well off it. So if you take a closer look here, I did this on my recap Friday just to let everyone know. This has been the trend. This has been the lower end of the uptrend, on the accelerated uptrend, and here's been the middle. So we broke below it for a brief moment, you know, about 3 weeks ago, and then we tested this area. For right now, I would say you have to trade long against this 1333 to 1337, and if we do get a close above this resistance today, above this 1350 to 1353, the next real resistance is going to be back from last year. When you look over here, that 1370 high, which is very, very close.
So then what are you doing today before we started taping? You were saying you did have some hedges on. You also had some long positions. So how are you managing this up open?
Well, I'm going to stay with my macro longs. That
are you adding?
We'll see. Like Qualcomm. I've been holding Qualcomm. On Friday, it acted very well. I'm probably going to add, if it could stay above 62, I think it gets some momentum. VMware has been acting very well. I think if it can get above 94.50, it can continue to go. Apple on long some. If it can get above 500 and stay for cash flow, maybe it gets to 503 to 505, and then I'll take that trade.
Well, because a lot of theories right now is that, say, tech and financials are way overbought. Are you seeing that in the charts?
Well, right now, the McClellan oscillator that was up like plus 70 at some point last week is now negative. So last week's action actually worked off the overbought nature of the market. Yes, the RSI is still high, but again, until we start breaking some of these composure levels, until we break and close below the 10-day moving average to test the 20-day, you know, you have to stay with the current composure and the current speed, because everyone wants a correction, and when everyone wants something, you usually don't get it, so you have to adjust.
So then what about, say, a Goldman Sachs? What do you do with that stock today? What level do you watch?
Goldman Sachs, that's great to ask, because Goldman Sachs hurt me last week because I got excited, I got aggressive, and I started buying it above 117, 117.50, and it just wasn't ready to get through. You know, look at the move that Goldman Sachs has had from the bottom all the way up to some macro resistance. So macro resistance is never easy to get to on the first try. So if you look here, it failed around that 117, but it's holding the 10-day. I would say for momentum to stay real strong here, if it could hold above this 113 area and then go sideways again, I think you still stay in a tier 1 Goldman Sachs. At some point, it will try and get back above this 117, 117.50 for then a move to about 125.
All right, go ahead. You're going to say something else? I was going to
say, like midweek, a lot of these key stocks did not get above their momentum levels, so it gave some concern. We were trading IBM, couldn't get above 194. Caterpillar couldn't get through that area. You know, Qualcomm still was a little lethargic. So you had some clues that we needed to come off. Now the question is, was Friday enough?
Exactly, and we're going to have a lot more on this, especially other sectors you want to watch out for, like energy and the OIHs, in the entire morning call, so check it out on The Street.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.